and welcome to the Blue Space. My name is Susan Juguna, Senior Vice President, Financial Institutions Group. Across Africa, the need is clear. Energy and infrastructure are the backbone for growth. The bigger question is, how do we actually fund for this infrastructure gap? An interesting twist is that Africa is not short of capital. We're actually short of channels to move this capital into high-impact projects. Across the continent, over $4 trillion parked in banks, pension funds, and in reserves. Closer home in Kenya, $17 billion exists in pension assets. Yet, only 2% of that is invested in infrastructure. To unlock this capital, we will need to move from just discussions. It will demand conviction, strategy, and structure. In the 2025 East Africa Institutional Investors Forum, regional leaders came together to unpack this particular dilemma. Let us listen in.
As stakeholders in this vibrant region, we must work together to develop financial instruments such as green bonds and infrastructure bonds that can mobilize long-term domestic savings for our regional projects. By unlocking domestic capital, we not only diversify our source of funding, but also strengthen our economic resilience.
It's incumbent on us to dilute that reliance on government and to bring this into the private sector. This is about creating the private capital markets effectively.
We need to look beyond the traditional assets, considering some of the alternative investments available. And obviously, infra would then form one of those key areas that we would look at.
A big investment. No one person can take it, so we need to work together. We need to syndicate, and I think banks have done that really well. We need to think as managers long term, while also just providing for liquidity. Capital is there and it's available.
Fund managers need to become, or administrators need to become also infrastructure manager, work with the people.
In theory, we are all clear on the building blocks. The question is, how do they come together to unlock that pocket, that capital pool?
It is important also that we think beyond just, your financial return, but also how we can be able to deliver social impact.
All right, gentlemen, you've seen it, and numbers do not lie. So the capital is here. The real question is, how are we actually going to convert from capital on paper to real concrete on the ground, really, for the impact of nation building? Let me start with you, Brian.
Yes, indeed, numbers don't lie. You're talking of over $17 billion worth of assets, of which only 2% is allocated towards infrastructure. The capital is there. There is a huge scope to actually get this capital to infrastructure projects. What we need to do as a very bare minimum is to ensure that we have structured vehicles through which this capital can be channeled into these infrastructure projects and infrastructure in general. Here we're talking, the likes of infrastructure bonds, we're talking the likes of pooled funds through which this capital can find its way into infrastructure projects.
And maybe to add to what Brian has said, it is very important for all the players to have the mindset of co-creating solutions. It's only then that the interest of the various parties will be taken into account in supporting the development that we want to see, and also make it possible for the local investors to put their investments into the productive sectors of our economy.
Fantastic. And as I think about capital is there, there's something about money that needs structure, guardrails, and ring fencing. So I'd like us to pivot into the question around regulations. Do we feel that these are sufficient guardrails so that institutional investors feel they have confidence to to actually deploy their capital into energy and infrastructure. Let me start with you, Brian.
Yeah, so regulation played an important part, as you mentioned. Essentially the premise is to ensure that money is not lost. So historically, they've been very stringent in just trying to ensure that money is not lost, and that doesn't happen. But now over time, people are beginning to understand the infrastructure asset class. And so regulations have to evolve with this infrastructure asset class coming on board. And so what's happening is in Kenya, for example, the Retirement Benefits Authority is reviewing those guidelines and coming up with new guidelines to allow for the pension funds to invest funds in the infrastructure asset class. At the same time, so what that has done is that it has opened up a pathway for that funding, but that funding has to go through a vehicle. And this is where now you have the Capital Markets Authority coming and saying, okay, we have a couple of vehicles that we can put together to allow this capital find a home in infrastructure. And you're seeing the likes of green bonds that have been put in place for infrastructure. You're also seeing the likes of REITs that the Capital Markets Authority is opening up to and piloting. So that's very important. So regulation is important, and it's also important that regulation evolves with the asset classes that are coming on board, and in this case, with infrastructure asset class.
So the capital is there, and we've assured institutional investors that their money is safe because policy is evolving and it's already there. But the question is often asked about how can we, as capital owners, understand energy and infrastructure in terms of capacity, technical expertise. Do you feel we're there, or what more is needed for us to understand this space?
There's need for capacity building, and there's need for players, even within the investment community, to be familiar with the capital markets. As Brian has observed, through the regulator, through the trade associations, we can be able to work together and create the necessary knowledge and skills that are needed to get all the players comfortable with first the regulations of the market, and also for them also to appreciate what it takes to run investments in infrastructure. And that way, you are making people more familiar, more comfortable, more appreciative of the impact that their actions have on the wider economy. A good example is promotion of United Nations Sustainable Development Goals. Those goals, if there's clear focus to drive them from a country perspective, you're able to achieve a lot of benefits, both from provision of affordable clean energy. You'll be empowering communities and individuals, and that helps you to reduce level of poverty. You'll also be able to bring equality, because there are communities who are in areas that are not well served with infrastructure or amenities. But the moment you mobilize this local capital, you're able to create a vehicle through which certain areas of the country can be developed with people who understand the dynamics of the country where they are investing.
Right. And just listening to both of you, there's an underlying theme that I'm hearing, different players coming in. And one of the discussions in Arusha was actually about collaboration. This is a difficult task to turn around our country. It's a lot of work and it needs all hands on deck. What role do you see collaboration playing in this, and what are some of the players you think can come together? Brian?
Yeah, what I'd like to put across is it will take a village. It will take the village for us to raise this infrastructure child. And so here, the village speaks to collaboration, and that, you're talking about, the bank, financial institutions, be it the banks, the asset managers, the pension funds coming together the regulator to make this a reality. Collaboration is absolutely necessary.
Just to add to the point of collaboration, what you realize is that in the society where we operate in, whether we are looking at ourselves as business community, we are looking at ourselves as financial institutions, or we're looking at ourselves as investors, there's need for all of us to think through what goods looks like. And if we can bring in the various pools of knowledge that we possess, we can be able to work together and create, first, an environment that makes the investment possible. Second, create investment instruments that will make investors also comfortable, and also work with the regulator to ensure that the environment under which these investments are happening, it's safe enough to safeguard everybody's interest. And by working in a collaborative way, we will be able to leapfrog some of the developments that ideally has been left to the government to drive. And this is the way to go, especially when you're able to tap in the private capital to spur economic and infrastructure development in the country.
I couldn't agree more. So our audience has it. Clearly, Kenya has the capital, the institutions, and the urgency. What we need is a mindset shift, conviction, and coordination to deliver this big mandate, because the future of infrastructure is not foreign. It's domestic, and Kenya has what it takes. This wraps up this edition of The Blue Space, where bold ideas meet Africa's future. See you in the next episode. Thank you for watching.